Emerging markets under pressure today, further widening the gap between US markets and the rest of the world. CNBC's Bob Pisani joins us now with more. Bob?
Hello, Wilf. I've been the stocks correspondent for 22 years for CNBC, and I have rarely, I think if ever, seen the kind of divergences in the global markets we're seeing now. Let me just show you simply what I'm talking about. The S&P's up about 8% a year this year. That's a good performance. Look at the rest of the world, though. Germany, representing Europe, down 7%. Indonesia's down 10%. Shanghai, that's China, the biggest market there, down almost 20%. The Philippines, most emerging markets are down double digits. A 26% divergence between the United States and the Chinese markets. That just does not happen very often, and it's rather startling. And a lot of people are looking at this and saying, you know what? This has got to change and go back to some kind of mean reversion here. So Morgan Stanley yesterday, for example, they had an overweight on the United States. They said, listen, the prices are so crazy, not anymore. We're neutral on the United States. We think we should have a modest overweight now into Europe because of the pricing divergence, although they don't recommend overweighting Japan or emerging markets right now. That's the kind of thing that's going on the street. By the way, interestingly today, we've seen social media stocks weak across the board in the face of the testimony from Twitter and Facebook executives on Capitol Hill. At the same time, Chinese social media, emerging market social media stocks are under pressure, like Weibo and Sina, Renren, Yandex. These all trade here in the United States, not because of pressure from Washington necessarily, but they too are under pressure in China. Chinese regulatory authorities are also pressuring them for some, not all the same reasons that we're getting some pressure here in the United States. Largely over there, it's more economic issues. They don't want some of these companies getting too powerful. So right across the board, strength of the dollar, a little bit of weakness in China economically, some regulatory pressure. Some of these emerging markets are having a really tough time.